Talk to us a little bit about what it means if we're out of recession GDP. We're not really seeing any real growth. It's very difficult to get the jobless numbers down. I mean, we shouldn't even really be talking about growth unless we see a 0.4, 0.5%.
Well, lots of questions there. I mean, let's get one thing out of the way. These numbers are better news for the Eurozone, and we could do with some of those. The recession has ended in France. We've seen very strong growth in Germany, and it's likely, as we'll see in the next hour, that the recession overall in Europe has ended. The problem is whether this recovery is going to be sustained, as in whether you're going to get an extended period of growth, and as you alluded to, whether that growth is going to be reflected in some better developments in labour markets. And there's big question marks there, because the thing that's been missing in Europe recently, where we've seen jobs growth in the US, we've seen it in the UK, we've seen exactly the opposite in Europe. We've seen rises in unemployment. It's over 12% for the region overall. It's closer to 14 if you exclude Germany. Those figures reflect a chronically weak economy, and one quarter doesn't change that. We need to see some stronger growth numbers, and there were some reasons why growth was strong in the second quarter that may not be repeated in the third and fourth. So it's not that, I mean, this is the end of the recession technically. Whether it's the beginning of a sustained recovery is a much bigger question, and I think that's a much grayer area.
Can I believe the French number?
There are reasons why it's, I mean, yes, you can, it's true, but there are reasons why it's as strong as it is, and they include the rather cold winter, which meant that energy consumption was extremely high. That's going to come back in the third quarter. There was probably some spending brought forward before tax rises that will impact on the third quarter and beyond. You won't get a 0.5 in the next quarter. It could go pretty much back to normal. One of the interesting factors here is that the well-known PMI surveys, which allow comparisons across lots of regions in the world, are much stronger in the US and UK, even in Japan, than they are in Europe. In Europe, they're signifying weak, more or less negligible growth. Yep. So there is a risk that the second quarter figures, good and encouraging as they are, won't be repeated.
Stuart, are you most worried about France overall? This is a discussion that we've had over the last couple of weeks here on the Pulse. One of the Fed presidents was saying, look, the French figures overall may not stack up. This is what he's most worried about. I think it was Fisher from the Fed. Do you share those concerns?
In the sense that they don't stack up, as in they may not be repeated, absolutely I do. France has been through some sort of political upheavals, as we know. There are some well-documented issues to do with less flexibility in some of France's markets. So yes, there are grave worries there, and some of the survey evidence that you look at, some of the leading indicators you look at for France are still really quite worrying, and unemployment is still rising in France. So there are genuine reasons to worry, but there are reasons to worry about other areas. The peripheral countries, which your colleague referred to earlier, are still in recession. They're still shrinking, albeit at a slightly weaker rate, but they are still shrinking. And though the ECB needs to address those issues, one concern is that these figures today may relieve the pressure on the ECB, which may not be a good thing. I think the ECB should be paying more attention to the strains and difficulties in those peripheral regions.
Do these data point in any way towards debt sustainability?
If they were repeated, quarter in, quarter out, they would help enormously, because you're looking at a sort of 3% annual growth rate in Germany, 2% in France. Nominal GDP growth of 3, 4, 5% perhaps. So yes, that would help enormously, but I don't think they'll be repeated.
When are we going to see employment starting to rise, so unemployment to come down? Is this maybe the best measure? We see all of this forward guidance, right? The Bank of England, the Fed being unemployment. Should we not be looking at that figure to tell us whether we're seeing a general trend of upwards betterness?
What you've got to see in Europe to bring unemployment down is two things. One, a little bit more flexibility within labour markets. That's, the authorities are trying to impose that or introduce it. The second thing is you've got to see growth. And you've got to see growth at the trend rate or a little bit above, because that will bring labour resource back into productive employment. And trend growth in the Eurozone is probably about 1.5% at most. So if today's figures were repeated, you would start to see falls in unemployment. The fact that you haven't seen any falls in unemployment in the second quarter outside of Germany casts a lot of doubt on these figures as being an accurate representation of what's actually happening. As you said, it may be a one-off. Exactly. And so we need to see sustained underlying growth of 1.5% or so, 0.4 a quarter for the Eurozone overall. We're probably not quite there yet, and the second quarter is probably an exaggerated picture of the true underlying picture in the Eurozone.